Hey team, and welcome back to another video. Today I wanted to go over today's market because I get a lot of good feedback from these trade breakdowns. So we're gonna look at a trade that I placed and then the trades that I missed, because today was very clear for me. So we're gonna go over why I missed those trades, what I could have done better. Then hopefully you guys can learn a thing or two from it, because even though I did make money today, I could have made a lot more, but unfortunately I did not, even though I knew exactly what was going to happen. And that's just a part of the game. We take it and we move on. But what we can do is we can, at market close, sit down, review the day, go over what we did wrong and what we did right. So let's go over exactly what I saw today, and hopefully I can help you guys understand a little better. So coming into today, we're gonna go with 9:30 because most times I am not trading until 9:30. That is the New York opening bell. I can, according to my rules, start trading at 8:30, but oftentimes I will wait till 9:30. So this was essentially what I was looking at coming into today. If we go ahead and look at the daily chart, a lot of guys were bullish, which I completely understand, right? We hit this huge daily volume imbalance and we hit optimal trade entry of this 1 day range, right? As you can see, we hit optimal trade entry here. We swept a low here and we also swept yesterday's low. So I completely understand why people came in bullish. However, if we go to the 4-hour time frame, I was bearish until we took out this low and this low. So I guess you could say that I was overall bullish, like longer term, but shorter term I was bearish, right? Because I wanted to see these lows get taken out. Now the reason that I wanted this low down here specifically to get taken out is because this low did not fill the gap, right? And if we go to the hourly time frame, this low did not fill this hourly fair gap, which is what I wanted to see. So I was bearish until we hit these lows, and I waited until 9:30 to place a trade, because oftentimes what you will see at 9:30 is a Judas swing. And what a Judas swing basically is that it is a manipulation move in the opposite direction of the drawn liquidity to the trick traders. So let's say that the shorter term bias was bearish and we have a 9:30 opening that goes higher. That is also manipulation that then takes us down afterwards. So let's jump to 9:30. This is what 9:30 looks like. Now we had a lot of equal highs here acting as buy side liquidity, and as you can see, price did not sweep these equal highs here, right? We just made more equal highs. So now we have 3 equal highs basically. I really wanted these highs to get taken out, and I actually had a buy limit a bit above these because I wanted this to be turtle soup, which basically means that we sweep the liquidity and then we go straight down. That is what I wanted to see. So my first buy limit was on the 15-minute chart. Yeah, it was this fair gap up here, this small one, because then I would include a fair gap and the highs. That was my first buy limit of the day right here, and it looked like this. Stop above here, and then I would target the first low that I showed you on the 4-hour time frame. A bit of an optimistic risk to reward, but that is what it looked like. Unfortunately, I did not get filled, but that's fine. Then what I saw was that we obviously moved down and then we swept the first low, right? If we go back to the 4-hour time frame, this was one of the lows. That was my drawn liquidity, the bearish drawn liquidity, right? The shorter term drawn liquidity. But I still wanted this low to get taken out, so I was still looking for shorts at this moment. And the reason why I was anticipating this low to get taken out is also because this looked like a higher time frame market maker sell model, right? We have that buy side curve here, and then we have that sell side curve here. Ideally, this is where it would end, but I was expecting this low to get taken out and then a pullback. So even though we swept this low here, I was still bearish minded. So if we go back here on the 5-minute time frame, we can now see that we're starting to approach that low which I was talking about. But then what ended up happening was I was on the 1-minute chart, and then we got this pullback to the upside, right? And as you can see, we just continue to go up. Now, a lot of people was looking for longs at this point, but I really did not want to long with that low open. When we get this close to a low and then start reversing, that's often manipulation, and then we go down lower again. So what ended up happening was we had the buy side here, right? Of where we engineered sell side liquidity, low resistance liquidity. And then I was expecting a sell side curve here. And so right here, we get the first stage distribution, which is this accumulation right here. And typically in market maker sell models and market maker buy models, I look for my entry at the second stage distribution to make sure that it is indeed a market maker sell or buy model. So this was the first stage distribution. And then right here, we get the second stage distribution, right? This small pullback here. So this was exactly where I was looking for my entry to go short down to the low. If we look at the time, this aligns very well with the ICT macro that says 1150 to 1210. That's an ICT macro, meaning that oftentimes high probability setups will appear within this time period. So that was even better. So right here, I had placed my limit order, which was the retest of this bearish wick or a bearish breaker block. So my trade looked like this. I had my stop at this high and my target at this low down here. But what ended up happening? Price just completely rallied without me. So throughout the whole day, I knew that we were going to go to this low, but I missed my first original entry up here because we didn't sweep the highs. Down here, we swept the first low, but I told you I was still bearish until this low got taken. Then I got a 1 minute market maker sell model. And then I missed my second entry at the second stage distribution, which was right here, right? As you can see, price never came back and I just watched price run towards my drawn liquidity, which is unfortunate, but it happens to all of us. There's nothing we can do. But then what ended up happening was we did sweep that sell side low. And what also happened was we hit this 1 hour gap here, right? So we both took out this low, we filled the fair value gap, and we have that 1 hour gap as our delivery. So at this point in time, I was looking for longs, right? Because my sell side objective was taken. So now I wanted to see longs, right? So I was expecting this right here to be the sell side of the curve, and this right here to be the buy side of the curve, right? So a market maker buy model. So I was expecting a buy side curve here, and therefore I was looking for longs. I was on the 5 minute time frame, and I will show you exactly where I placed my entry, where I actually got filled, which was right here. As you can see, we have this bearish 5 minute gap here. We just took sell side liquidity right here. So if we close above this gap with displacement, that is exactly where I would want to enter, because I always need displacement and I always need a liquidity sweep. Now my original entry would have been right here on the 1 minute time frame. This would have been my original entry, and I also took it on my paper account. But because the time was off, it was in the middle of lunch hour. I of course did not place this on any of my live accounts, but I did take it on paper and I did publish it on Twitter that I did in fact take it. So this would have been my original entry on my live account, but because of the time, I did not take it. But I wanted to turtle soup these lows, because often what will happen when we hit a predefined sell side objective or buy side objective is that the first original hit of that objective will get swept, and then we get that distribution move, right? So this was the low that took out the 1 hour low and filled that 1 hour gap. But what will often happen on the lower time frame is that we come up, trick traders into going long, come back down, and then sweep that low that originally took sell side or took the objective, right? I don't know if that makes sense, but you could look at it as sort of like we sweep the sweeper. So this was the low that swept liquidity, and so we have this which sweeps the low that swept liquidity, right? That's really how I anticipate my turtle soups. So this was my original entry, but I could of course not get that on my live account. So then I was looking at this, right? I had a beautiful sell side liquidity sweep here, and I had an optimal trade entry of the 5 minute range as my delivery, right? Also, if we zoom out again to the higher time frames, we were also in optimal trade entry of the 4 hour and 1 hour range. So that was even better. What then ended up happening on the very next candle, we close above this with significant displacement. So that was my entry as soon as this candle closed. And this right here was my stop loss. Now, this is not a random stop. The reason that this was my stop loss was because if we go to a 3-minute chart, we can see that this is an intermediate term low. It is a swing low, meaning that this candle is not lower than this candle, and this candle is not lower than this candle. So it's a 3 candlestick pattern, and that is what defines a swing low. But it's not just a random swing low. It is a low or a swing low that filled a fair value gap. That is what we identify as an intermediate term low. And ideally, if we are bullish, lows like this should hold. So that was my stop loss for this trade. And my TP was the wicks, or the bodies here, and not the high. Now, a lot of people will ask me, well, why not the high? And that's simply because recently I've discovered that market will often respect these rejection blocks instead of taking the high. So recently I have been taking my profits at the body low, right at the rejection block, instead of at the high. So that is exactly what I did here. And if we take a look at the trade, you can see that it went beautifully, right? We obviously had some trouble here, a little bit of consolidation, kind of hard to sit through. However, it is expected. I expected the power hour to send me to my TP. The power hour is from 3 to 4, which is often where a lot of volume will be put out. And that is exactly what happened. And if we actually play it out here, you can see that we do in fact take out the high after this pullback. But you can see how this rejection block really made price dump a little bit before going higher, right? And so to be safe, I placed my stop at the rejection block and not at the high, because I was also very satisfied with the profit for the day. I missed 2 of my entries. This was the last hour, so you know, I just took what I could get. And yeah, that was today. So overall, a really good day. I'm up around $750 But had I gotten my original entries, I would have been up a lot more. But that is something that we shall not worry about as traders. There's no reason to worry about what could have happened, right? Because there's nothing we can do to change that now. All I can do is look back at it and then wonder what I could have done better, right? So if we go to this 1-minute market maker model here, right? Instead of waiting for this breaker again, maybe I should have entered off of this fair value gap here, right? Because what do stage 1 and stage 2 have in common? We have one fair value gap here, right? That gets traded through, and then the second one holds. If we look down here, we have a small gap here that gets traded through, and then the second one holds, right? So maybe I should have just placed my entry off of this fair value gap instead of this breaker. Unfortunately, that is not what I did, but that is just what it is, right? Another thing that I could have done a lot better here was, instead of waiting for retracement for this breaker here, I could have also just entered as soon as this became a breaker. So at this candle closure here, this right here could have been my entry, right? Because the difference between an entry here, like right here, and an entry here is not a lot of money, right? So it's not even worth waiting for retracement when it's probably $20 we're talking about, or $10, right? So that is probably what I should have done, right? When we close or validate a breaker block, this close to the entry, right? There's no reason for me not to just enter straight off of the closure of that candle, which validates the breaker block, because the dollar amount is so small, right? So that is probably what I should have done different. And now I have that noted till next time. Unfortunately, I did not think about that at this point in time, but that is what we do, right? After market close, we go over the day and we see exactly what we could have done better. So overall, successful day. Could have been way better, but in hindsight, everything could have been way better always. So we're taking what we can get. $740 is a lot of money. So we're completely fine with that. Yeah, and I really hope some of you learned a thing or two here. The main thing to take away from this is probably the market maker models, right? Because right here, what made me want to enter this position was the market maker sell model, right? If we go to the 4-hour time frame, The reason why my drawn liquidity was these lows is because we had this 4-hour market maker model, right? Market maker sell model. I think even if we go to the 1 hour, the first low was obviously a market maker sell model too. The market maker models are probably what you should take away from this. I do have a simplified version of market maker models on my YouTube somewhere, but you could also just watch other content creators explain it if you want to. It's a very, very valuable topic, and I think everybody should indeed learn this because it is just so helpful if you're an ICT trader. So yeah, that was today. I really hope you enjoyed, and I will see you in my next video.